Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here for the weekly forecast for the week beginning July 31st, Monday, today. Okay, let's begin. Today, the main releases were, of course, the China manufacturing PMI. That one already came out, and there's some Euro numbers, Euro CPI, and the GDP. These are, of course, our preliminary releases. For the CPI here, we can see quite at estimates. The core CPI slightly above the estimates. The GDP slightly above estimates, showing strong growth in the Eurozone. The CPI month-over-month figure, however, is quite quite lower than expected. And yeah, it's something to watch out for in the future. If you're trading Euro pairs, going to see this is effective to determine the general direction the pair is going to take, maybe for the day or even for the week. But let me continue. Let me not talk a lot about that for now. On Tuesday, 1st August, we're getting Australian Reserve Bank of Australia interest rate decision. This is important for the Australian dollar, and as always, there's usually a setup there early in the morning here in this time zone. Yeah, you can see this is 4:30 a.m. GMT. Early in the morning, there's usually a setup, and can take you can take it and make your money for the day and end your day there. Continuing, still on Tuesday, we'll be getting the ISM manufacturing PMI for the US economy. ISM manufacturing PMI, ISM manufacturing prices. This, of course, is an important measure, a leading indicator of inflation, and the PMI as a whole, an important leading indicator for the economy as a whole. So this one for now, you can see the estimate is of 42.5. If it comes out lower than the estimate and even lower than the previous one, that of course means you can expect lower prices even in this to spill over in the services sector, and ultimately that can be uh, what do you call it, an indicator that to show the CPI is likely to also cool further down below expectation. So this is a very important index to watch out for, the ISM manufacturing prices index in the PMI. Another important data piece, the JOLTS job openings. This of course is a measure of labor demand. We're going to see if the labor market is tightening or if it's starting to loosen. Of course, we are, as you can see now, estimates are 9.6 million job openings compared to the previous reading of 9.8 million readings. And over the past few months, before last month, the readings were at 10 million job openings. But now we're seeing some of the trend is starting to come down. It's starting to become a downtrend. That's going to be important to watch out for. Of course, big indicator of the strength of the labor market, the strength of labor demand, big data released there. Another one is the Japanese Bank of Japan monetary policy meeting minutes. This one, of course, is big for the Japanese yen. If you're trading the yen pairs, this is something you need to look out for. On Wednesday, of course, the most important reading here is the ADP non-farm employment change. As you can see here, the estimate is quite low, 188k jobs. After last time, it got a stunning 497k, which was over double the estimates. Yes, and it ended up being a smokescreen because the actual NFP report itself was below estimate. So this is important to look out for, but not not exactly. It doesn't mean it's going to be accurate. Just going to wait and see if there's going to be a big discrepancy between the actual and the forecast we're expecting. That's going to tell you what to expect in the NFPs. On Thursday, we have the Bank of England Monetary Policy Committee votes cut, vote hike. Yeah, the Bank of England interest rate decision is on Thursday. This, of course, is usually a very volatile release, very volatile time window for trading the GBP pairs. But of course, if you're like me, you will be there and you will trade these releases. Of course, risk management is important. As you can see now, we're expecting a 5.25, 25 basis points hike, just like the Fed did the other day. And yeah, this is the current expectation. We're going to wait for Thursday and see if there will be a setup in the pound pairs. You might as well get in low risk, high reward. Just manage your risk well. You don't need to over risk these releases. Initial jobless claims, another important release for Thursday. And yeah, non-farm productivity, unit labor costs, and of course, ISM, non-manufacturing employment report. This is the ISM PMIs for the services sector. And yeah, the employment report is an index within the PMI, and this is important to monitor to check the strength of the labor market. This is a very important leading indicator in that it gives an accurate picture of what the labor market is doing. If the job numbers will start coming out weak, you're going to see that here first in the ISM reports. ISM manufacturing report. This one, of course, on Tuesday, ISM manufacturing PMI, and on Thursday, the ISM services or non-manufacturing PMI. These are important leading indicators for the economy, more so in the short term for prices and employment. Very important to look out for. You might decide to trade them or not, but for this one, it's best you just sit out and use these data pieces to prepare for the NFPs. Then on Friday, the Reserve Bank of Australia releasing the monetary policy statement and something else. Yeah, the non-farm payrolls. They're coming out on Friday. The US non-farm payrolls. The estimate is currently at 200K. The previous one, of course, was at 209K. This time, my estimates, of course, you can. It's not. I can't really give a figure right now because these private non-farm payrolls, these are the important numbers. And if you see an uptick here, as you know, if you are a frequent visitor to this channel, you know the difference between the private non-farm payrolls and the non-farm payrolls is government employment. The total non-farm payrolls number is the private numbers adding onto this number the number of government employment. Yeah, to bring the total of the NFPs. So government hiring is a big contributor to the total NFP number, but then private non-farm payrolls are what show the real situation of the economy, especially now since the US government, if you remember, they removed the debt ceiling. They suspended the debt ceiling and government spending is out of control. They have spent like an extra 1 trillion so far, I think. Yeah, $1 trillion. And yeah, they're really strong on the hiring sector to prop up the job numbers for political reasons, of course. So this is important to look out for the private non-farm payroll number and of course the total number itself. Another important reading here is the unemployment rate. You can see we're expecting it to stagnate at 3.6%. We can't really talk a lot about this and say if this is going to be bullish or bearish for the market because the Fed decided to take a data dependent approach. If these numbers come out according to estimates, of course, you're not going to see any big movements. That's almost a guarantee. You're not going to see any big price changes if these numbers come out according to estimates, which of course your leading indicators would be the ISM non-manufacturing employment PMIs, yeah, and ISM manufacturing PMI. These PMI readings will be very important to help you get a picture or an idea of what to expect with these NFP numbers. That's it. I think that's it for the week, and Yeah, you can see some Canadian releases here at the same time. This is this is going to be especially volatile for the USD CAD because both economies will be releasing very major data pieces at the same time. It's usually very volatile for this pair, and I prefer to not trade this pair during this time. Here, of course, you just go with euro dollar or the Japanese yen, depending on whether you're expecting strength or weakness of the dollar. And of course, yeah, the stock market, the Nasdaq and the US 30, the S&P 500, very there usually some clean setup sometimes there aren't any, but yeah, we're just going to wait and see what this week is going to bring for us. Looking at the charts now, here we are. This is gold. This is my gold chart. The currently there is no clear setup that I am expecting, but I was intending to catch this upward swing from this original point. Let me put a trend line here to show you what I was expecting. You can see from this high, from this first retracement here, there was a clear trend line kind of coming down. Yeah, I was expecting this sell-off to kind of steepen a bit and then getting the buys here in the 1936, 1938 levels. This is where I was expecting the buys, but currently I am I am out of this one. I am not trading gold for now, unless somewhere in the week, maybe I don't know, maybe Wednesday or Thursday, I'll see a setup and probably decide to get in. As for this one, let me put this trend line here. Yep, this is what I was expecting to catch on Friday. Yeah, I was expecting price to make a retracement here and then getting some longs, and then I was expecting price to just kind of rally to these highs, but as you can see that hasn't happened, and it's just a wait and see approach. That's what we're going to use here, a wait and see approach, and see what this week has in store for us. Something, let's check the US 30. Yeah, this is the US 30, and as you know, the uptrend here was very strong and it snapped its 13-day gain streak on Thursday last week. I did catch some sells here. This whole 2 hours of intense sell-off, I did catch some of that moves, and yeah, it was good. This pattern is a continuation pattern. It's a megaphone. It's kind of price is just going forming higher highs, but at the same time forming lower lows. Yeah, this is a continuation pattern. It's just a big retracement, I can say, like not exactly big, just a flat retracement, because as you can see, price keeps on correcting itself after so this impulse. It kind of sold off, then bought up, some slight retracement here. This was of course on Wednesday during the FOMC press conference and interest rate decision. Slight uptrend here, then a steep correction, then you can see the price is picking up again. This kind of where price is creating high highs and lower lows. This is a megaphone and it's a continuation pattern. It's just a big retracement. You can expect price to rally higher. It's going to take something big for this market to reverse. It's not just going. Let's check the daily time frame. Yep, as you can see, this is a very strong uptrend, and here where we have seen that megaphone, it was just a retracement. This thing is going to go bullish. Probably even refresh the yearly highs. No, the highs of 2022, 2021. We're going to see we're just going to wait and see for now. But as you have seen, price is very bullish. It's not a smart idea to go shorts now for any reason whatsoever. You just have to wait and see for convincing data. When the data is convincing enough, incoming data and of course the technicals, when they start becoming convincing enough to tell you it's time to short, that's when you can think about shorting. But for now, the US economy is doing good. inflation is cooling. We're getting that soft landing scenario that the Fed usually wants, and that's why it's just not. I don't think it's a great idea to be bearish on this index for now. Yeah, maybe short-term sells. Short-term sells can work, like the way I caught this sell here. Yeah, short-term sells, intraday sells, nothing. Yeah, you can catch that. But if you're expecting a significant correction, like maybe to the 34K levels, that's just might not happen for now. That's not in the picture. So yeah, that was it. I don't think I should look at any other pair for now. Let's check the euro. Here we are. This is my euro chart. This is what I saw from last week. Okay, I was trying to catch these sells from this point, but end up being taken out, and then price just kind of sold off to my point of interest, and then now we're getting that reversal that I was expecting. Yeah, this is a very clean move, and you can expect buys from on this pair going forward. The dollar index, you can expect it to continue weakening, and that of course is bullish for the euro. Something else I should highlight is for this one this week. Yeah, this is what I'm expecting for the whole of this week. Just a smooth upward swing, probably today's highs 1.13 levels here. Probably refresh this high, but we're just going to wait and see. Intraday, looking at the intraday setup, of course, we're going to see some things, some continuation patterns, and that's going to be big. That's going to be the signal to go long, or rather small signals to go long. For example, here someone showed me today morning there was a falling wedge here, which is usually a good. I can't remember what that guy do, but there was something like a falling wedge here. Can't switch to lower time frame, but it was there and it was good. Some some people caught it, some people missed it, but anyway, there will be other short-term setups throughout the week to tell you to, or rather to confirm my bias, confirm my narrative of this euro pair going to refresh the 1.13 high. For now, that's it. I am done with this recap, this forecast. I mean, hope you get a lovely week, a shooting week ahead. That's it. Something else I should highlight also is that this week is a big earnings week. As you can see, the earnings calendar here, most anticipated earnings releases for the week beginning July 31st. On Thursday, this is probably the biggest day. Amazon and Apple will be releasing their earnings after the close, and that is of course big for the Nasdaq in the US 30. That's big. That's going to be big. You're going to have to watch out for that one. Of course, if you're going to trade those indices, the Nasdaq, S&P 500, the US 30, you're going to have to look at this calendar every day to see big companies releasing earnings. Especially, yeah, this is Tuesday. You can see this is Pfizer, Caterpillar, Merck. These are big companies in the US 30. You're going to need to watch out for that. Otherwise, that's it. I am done.